Hello and welcome. You're here with us on Bloomberg Quint. I'm Agam Vakil and I'm here to wrap the markets up for you. Now, it has been a dismal day of trade. On an intraday basis, we have seen the biggest drop since Brexit. We have seen a drop around 1.5%, and along with that, we have seen a lot of weakness in not just one or two sectors, but across the board. So what's really happened today is that we have seen weakness in the likes of your IT stocks. So you have TCS, Infosys, as well as a lot of realty stocks also dragging down the broader markets. Banking stocks continue to face pressure, but on the whole, it's just the fact that the advance decline ratio standing at around 13 to 14 declines as against just one advance is going to be something of a worry for traders, most certainly for bulls. So let's take a look at what's happened in the options market. As expected, one would most certainly expect see a little bit of an unwinding of options when it comes to puts. So when it comes to the 8800 and the 8900 puts, that's we've seen an unwinding here. On the other hand, further writing in the 9000 call and the 8900 call, as you can see. When it comes to the maximum distribution, once again, we have seen 9,000 continue to remain the main resistance region because we have maximum open interest there. On the other hand, we have seen significant amount of support building up once again at around 8,600 and 8,700, despite the fact that we are looking at some amount of unwinding there. Now, where do we go from here? Where I have Avinash Koraksakar of course, Precision Investments, the CIO of Precision Investments, who will tell us and guide us as to how to deal with these markets going forward. So Avinash, tell us, what do you think of these markets? Is this just one of those healthy corrections that we see along the way towards newer levels, or do you actually expect this correction to be a little more deeper before the markets move up forward?
So I think correction in this market is going to be quite deep. In fact, the bigger event I think everybody is going to view is basically the Fed event on September 21st. Our sense is that the rate hike kind of concerns have again started getting built up. And I think this probably would culminate when Janet Yellen gives her commentary on the 21st of September. But overall, I think even if the rate hike doesn't come in, I think the commentary from her, whether it would be hawkish and whether she would actually spell out a December rate hike, would be key events to watch out, because I think the markets have ridden clearly on liquidity, and this kind of negative surprise was going to come in. In case a December hike comes in, then I think the market would obviously take it as a kind of a dampener, especially for emerging markets like India.
Is there a way to pinpoint the weakness or the reason behind the weakness in today's day?
No, I think clearly stocks had run up like anything. In fact, there was some news which required the markets to cool off. So I think the global markets actually made the markets go up.
Right.
And now the global markets, the music has stopped. So obviously, you're seeing the same global markets have actually spoiled the party.
Right.
So my sense is, I think today, typically if you see reality, as you mentioned, metals, if you mentioned PSU Banks, these sectors and stocks which had actually risen extremely high purely on liquidity, have seen a complete, rundown. So I think clearly for the next couple of days, I wouldn't be surprised if the markets could possibly see a 4 to 5% correction. Okay. And I think this would be a good healthy sign, because anything which goes in excess obviously needs to be corrected.
Right. So 4 to 5% is what we can expect, and it certainly can't be ruled out. But let's also take a look at what's driven the markets downwards in today's day of trade. Now, let's consider some of the stocks which have bucked the trend. Among them, we have Infosys, which has gained about 1.9%, Tech Mahindra and Wipro. So the IT stocks are the only ones which have held on to the green today. But on the losing end, you have likes of Hindalco, down as much as 8.8%. Yes Bank, Bank of Baroda taking cuts of nearly 6%. Tata Steel, of course, we're expecting numbers from Tata Steel, the earnings from Tata Steel today, later on in the day. Ambuja Cements and Adani Ports are among the other losers in today's day of trade. So we have seen substantial amount of weakness across the board, except for the IT stocks, of course, which have borne the brunt of a lot of the bears in the market. But those are also the ones which are bucking the trend in today's day of trade. So that brings me to the next question. What are the sectors in the near term that could lead to further weakness? Will it be the cyclicals that could lead the markets downwards?
I think apart from the cyclicals, I think the rate sensitives, especially the PSU banking side, the metal side.
Right.
More importantly, even auto numbers, stocks like Maruti or Tata Motors, which have actually seen a very dramatic increase.
Right.
Probably these rate sensitives would also, correct, because the broad indication is that once the rate hike happens in US, I think till that time, possibly, our new governor may not actually, do a rate cut, which is more or less, expected by the markets.
Right.
So probably only in the, in the final quarter of 2017 is the time when probably we could expect a 25 basis cut. So broadly rate sensitives, metals, and most importantly the PSU bank, because these have been, typical cases where liquidity has actually boosted the share prices.
Right. So Avinash just alluded to the PSU banks, and let's also address the banking sector. Now, at least when it comes to the Nifty bank and its open interest, we've seen about a cut of around nearly 10 to 11%. And this is, of course, unwinding of long positions that we've seen after the fall that we've seen in the banks. So let's also address, some of these banking accounts and the weakness that we've seen. So, of course, leading there is a PSU bank. No surprises there. We have Bank of India looking at decline around 6% and a 6% cut in Yes Bank as well. And do remember, Yes Bank has now corrected as much as 17% from its life high of around 1550. We have also seen a lot of weakness in Bank of Baroda, Punjab National Bank, Canara Bank, State Bank. So all these banks are belonging to the public sector space. Axis Bank and Federal Bank among the other counters showing a lot of weakness. And it's as it is, as Avinash has already suggested, that we are looking at a lot of weakness in the PSU banks. But if you pitch PSUs against the private sector banks, how would you go about it, at least in the near term? How would you play, both these areas?
I think clearly, if you talk about the PSU banks, I think clearly, the frontline stocks like State Bank of India, Bank of Baroda, PNB could see some minor cuts. But, banks like Yes Bank, or for that reason, Axis Bank or ICICI Bank, these are also vulnerable kind of stocks, primarily because, asset quality concerns yet remain on the book. And more importantly, I think if you look at Yes Bank, which you mentioned, I think Yes Bank was a clear disappointment in terms of the QIP, and
absolutely,
I think the markets are unwilling to take the kind of justification put out by the management.
Right.
So I think it's going to be a loss of sentiment for Yes Bank for some time. Although broadly, the numbers are good, they have pretty good balance sheet numbers, but I think the broad consensus on the street is avoid banking for some time, because these are all index heavy stocks.
Right.
So you'll probably see the markets probably bogging down and correcting, because the fall in the stocks would continue for a couple of quarters.
So a lot of participants in the market are pegging the valuations of Yes Bank behind that collapse in its QIP. What, according to you, should roughly be the valuation for Yes Bank?
My guess is, the book value is roughly about 240. So, based on that, price to book is reasonable.
Okay.
So, clearly, I think a price of around 1100, if you take a kind of market premium.
Yeah.
So, around 1100 is a price which I am quite sure, if the stock corrects to 1050 or maybe 1000 odd levels, that would definitely be a good value kind of buying, opportunity.
Okay.
It's not the end of the road, but, the markets obviously don't like, something in excess, which actually happened with this.
Right. Okay, so that's as far as the banking space is concerned. Now let's also address what's happened in the broader markets and the mid-caps particularly. So, again, I'm going to talk about some positives in today's day of trade, and we have signed and SD now coming back up after the big losses that we've seen in SD Aluminium over the past couple of weeks. Trent, of course, and Navkar Corp also among the other counters which have gained. But as you can see, we really haven't seen much momentum in the gainers. It is towards the losers there we have seen a lot of weakness, and this is where I'm talking about. Now, Reliance Defense, of course, is taking a 15% cut after we've seen very poor earnings, poor set of numbers coming in, and it's the same for HDI as well. But along with HDI, the entire realty pack is showing a lot of weakness. So take a look at Diwan Housing Finance. That's of course a finance company, but Anant Raj, as well as Indiabulls Realty. So all these guys belonging to the realty space. You're looking at a lot of weakness in JP Associates, Castex Technology, Edelweiss Finance, once again back below the mark of 100, and this is something that a lot of traders are keeping an eye on as well. You have weakness in Reliance Infra taking a cut around 6.5%, Oriental Bank, Bharat Financial Inclusion, and in fact just the first 24 stocks all looking at a cut of well over 6%. So you are looking at a lot more weakness in the broader markets as compared to the bigger benchmarks. And again, Avinash, are there any pockets of value in the broader markets when it comes to the mid-cap space?
No, I think clearly, within the mid-cap, we've seen tremendous kind of growth. So I would say that, the cement sector, specifically smaller cement companies, something like a JK Cement or a Heidelberg Cement, I think clearly, we are looking at better volume numbers in the coming quarters post the monsoon, and I think clearly pricing power has come back.
Right.
So probably cement mid-cap stocks could be a kind of a good opportunity. I think clearly in terms of the pricing, in terms of the volume growth, both these factors are going to play positively. So I think cement stocks could possibly be looked at.
But you would wait for the markets to correct a little more before you enter something like
I think anything around 8600 odd levels
right.
could be a good entry point, although it's very difficult to comment on where exactly the markets could be headed lower.
Right.
But my guess is 8600 could be a good bottom.
And other than cement, are we looking at anything else that could, be a little bit of a savior for the bulls right now?
So I think clearly one should focus on the domestic stories. I think companies which are focusing on the global markets, especially Europe and US, I think should be avoided because there the volatility in the second half would be more significant.
Right.
And as you mentioned about IT possibly could get a heartbreak, from the second half.
Right.
My sense is, there could be a lot of deal losses in the second half for a HCL Tech or a Mindtree. And, only reason I think the stocks were up today was the rupee was slightly weak. And I think in this kind of market, everybody wants to, hide into defenses.
Right.
So clearly, I think IT could be avoided. But overall, I think domestic stories like housing finance or typically, consumer durables, the 7th pay commission numbers, this outflows would start. So I think wherever you get value in good amount of branded names, which have got a good, branded network,
Right.
those would be pockets of, comfort. But probably, when the market does.
Okay. So, that's Avinash Gunashakar, and he says that you can expect a little more weakness in the markets going forward. However, cement most certainly does look good in terms of value that it offers for now. Thank you, Avinash, for joining us. And as for you guys, we have seen a little bit of weakness today, but we just have to wait and watch as to where these market variables take us. And until then, do join us tomorrow as well. Oh, tomorrow is a holiday, by the way. So do join us day after as we take you through yet another day of trade on Market Wrap on Bloomberg Print right here, right now. Stay tuned in.